How's everybody doing? Long time no see. Yesterday. What a 24 hours it has been. So I am exhausted. Not only did I not sleep yesterday, but this morning my dog woke me up at 4, not feeling well. So I got out of bed and I didn't go back to sleep. And I'm going to try to get through this though. I didn't want to cancel it. I wanted to talk mostly about Target Hospitality, but I also thought we could talk a little bit about some of the other names that are interesting to me. Target Hospitality. So I'm just going to recap what I said yesterday, very early in the morning, which is that them adding the new language that there are other proposals and strategic alternatives to their boilerplate language, I think is a game changer. And I see no reason why they would have done that this late in the stage if there wasn't a very good chance that they do end up being acquired by a third party and not TDR. I don't know why you would give that disclosure unless it was a materially likely outcome for the company. The conference call had lots of great things in it. It was very similar to the previous conference call, but the three big positives in the conference call were: one, they are already looking to reposition the Dilly assets, and they even have a proposal on the table to utilize those Dilly assets. You know, I've in the past said that the Dilly assets are worth at least $100 million, but they're probably worth substantially more than that, considering the fact that they generated over 80 million in EBITDA for the two public companies that were running the operation there. So I think it's more likely than not that the Dilly assets do get repositioned, repurposed, and placing a negative value from the lost contract on there ends up becoming moot. If that does become moot, then you're back to a situation where the 1080 bid was stealing the company, and they would have had to pay up to 13 to succeed in taking the company out versus the $10 it's trading at today. The second thing that they talked about was the third government contract. And as of last week, the government was going full steam ahead to grant that contract by the end of the year. That contract is worth anywhere between $50 and $100 million. Clearly, there's optionality in whether they get that contract or not. And then the third thing was they talked about other projects. And he said in no uncertain terms that they are going to close on contracts, and they're large contracts. So if you put all of those things together, what do you have? You have a company that right now is doing $165 million in run rate EBITDA and a $1 billion enterprise value and market cap. That 165 is impaired based on Dilly assets not being utilized. It's likely that those Dilly assets will be utilized. It is not unheard of that we will get to a $200 million EBITDA number just on the Dilly assets being reutilized. If you then layer the third government contract and one or two other large contracts on top of that, it is absolutely not unheard of to think this company could be doing $300 million in EBITDA in 1 or 2 years on a $1 billion market cap in EV. It's too cheap. And how much someone should have to pay for it is anybody's guess, but significantly more than $1 billion. Now, I am known to do some conspiracy stuff when it comes to conference calls and delaying conference calls, not issuing press releases to announce future conference calls at the right time. And often these things do work, right? If a company is delaying a conference call, it doesn't necessarily mean it's a good thing. But if they're in the middle of a strategic process, it could mean they're trying to get something done before they have to report earnings. That might be bad, right? With Target Hospitality, they didn't do any of that, but they did do something, and I figured it out yesterday. So bear with me. If you go through the last 2 or 3 years, I went back as far as I wanted to until I was convinced that this happens every single quarter. At the end of the conference call, the operator says, "This concludes all of our questions. I now want to turn the call over to the CEO for closing remarks." And the CEO says, thank you for being on the call. I look forward to speaking to you at the next earnings date. He might say the month, in November, in March, whatever. He says this every single time. He said it in May. He said it in March of this year, and go back to every conference call before that. Well, what happened this time? This time, the CEO finished his answer to the previous question, and the operator said, that concludes our conference call. Everyone, please disconnect. There were no closing remarks. Now, this only could have happened for two reasons. One, the operator made a mistake. She was supposed to send it back to him for closing remarks, and she didn't. Or two, the company in their script told her not to send the conference call back to him for closing remarks. Okay. Now, if it was just a regular old quarter of a regular old company like Magnachip or something, I wouldn't think much of it, right? It probably would have just been a mistake. But if you're with a company that is 5 months into a process that just changed their language about the process to include more bidders and more proposals, and you make the judgment call to not get back on the call at the end of the conference call to say, look forward to speaking to you in November, it signals to me, if it wasn't a mistake, that they don't expect they're going to be doing a conference call in November, and it would have been disingenuous for him to say that. Okay. I have no idea whether she accidentally didn't send it back to him or she was told not to send it back to him. But it sure jives with everything else that's lining up in this situation. They changed the language. We're 5 months in. And if they've done it for 12 straight quarters and they don't do it this quarter, at some point you have to say, this all lines up to they don't expect to be on another conference call in November. My confidence that a deal gets done here is pretty high. The only way I think a deal does not get done is if some really good stuff is going to be coming down the pipeline. And the contracts are signed or almost signed, and the amount of EBITDA that is going to be generated is so substantial that the special committee can't agree to sell the company at $12, $13, $14, $15. So my risk is that it's going to go much higher. I think there's very little risk that it goes lower from here. They're going to have the November renewal. That won't be an issue. And you then have to just wait for contract news. Michael Schwartz says that is a stretch. Hey, I'm cool with, I'm not a conspiracy theorist guy, but if you told me, like I said, 12 straight conference calls, always done to a script, there's a script there. You can go read this conference call versus yet last conference call. It goes in exact order. They even speak in similar patterns, the CEO and the CFO, and they just change some of the words. And it just ended abruptly. In fact, almost all conference calls cut back to the management team for closing remarks. It's very normal. This woman does this professionally, the operator. So 100% of the time, I'm sure she's saying, I'd like to turn this back over for closing remarks. That's all she does for a living. But she just decided not to do it this time? Hey, let me stretch. If a deal comes in the next 3 or 4 weeks, it wasn't a stretch. If a deal comes 10 weeks from now, it was probably a stretch. But I think they probably have very good visibility, I think, into a transaction is my guess. And yeah, they just didn't seem the need to say, see you next time. Anyway, I lost my train of thought. The other way a deal wouldn't transpire would be that this third party bids higher than what TDR bid, but TDR decides it's not enough for me to sell, and then nothing gets done. And the really good news about this situation is that I believe TDR is a very willing seller. This is a position they've had for 11 years. They're a UK, EU-based private equity firm. They did not put in their 13D in March that they were not sellers when they precisely put that in 2020 in the 13D. And I think that they'll be more than happy to cash out at the right price. And that right price could be substantially above $10.80, right? So, oh, and finally, the biggest risk I had going into today was that the 1080 bid was pulled. And it was going to be pulled yesterday. And that didn't happen. The bid did not get pulled. So if the bid did not get pulled, and we're now 2 months after the contract loss, I'm highly confident that that bid is there, and that was just the starting opening of the process. Yet the stock's $10. It's crazy to me. The stock was 11 to 11.50 before they lost the Dilly contract. And there's an argument to be made that they might be in a better position with repositioning the assets because they will own 100% of it versus the partnership they had from 11 years ago with the for-profit prison company. Am I missing anything else here? So what do I like? I like Common the best. I did do some call spreads yesterday. They're hard to get on, but there you could find them out there. But I think Common is the best way to play this. It's very hard for me to see what your break is here. For the stock to go down in a break, you need them to announce that the process is dead. There are no strategic alternatives, whether it's a buyback, tender, whatever, which I think is very unlikely, by the way. They're going to do that, go that path. And then you have to have them really lose the November contract and then also not get any new contracts because it's not just too cheap. At 200 million of EBITDA, it's trading at 5 times EBITDA right now. At 165, it's trading at like six in the low sixes, I think. It's too cheap. So we'll see what happens, but it's by far my favorite position. It's my biggest position by far. It's huge. And I think we'll get a resolution in the next 4 to 6 weeks. And I think it's likely the third party wins, not TDR. And who knows what the third party is? This company makes so much more sense in part of a larger portfolio where they could diversify away the contract risk, right? If you put this into a specialty rental company that has, billions of sales that trades at 8, 10, 12 times EBITDA, this EBITDA just gets mixed right in there and they only paid 6 or 7 or 5 times, depending on what the actual EBITDA is going to be in the future. It's just multiple arbitrage. And it works. I know who bought those October 10/12s. And the volume yesterday in October was almost all me or my friends. So there's no one else playing with the options. All right. That's it with TH. Let's talk EDR real quickly. So TKO reported this morning, and the stock's up 7% to 117. Now, I still have a huge position in EDR. It's in November and January calls. And the play there for me is that I was going to play for appraisal. Sorry, not appraisal. Play for post-close lawsuits. Exercise the calls and then hold the stock for close. But things have gotten really interesting over the last couple months, as there's a really good case to be made to do appraisal rights here. Now, the average retail guy like me can't do appraisal rights, but I did find a lawyer that lets you piggyback on to the big guys that do appraisal rights. How would appraisal rights work here? So the way it would work is you have to own the common stock within 20 days after the filings become definitive. The filings will become definitive in a few weeks. You buy the stock, and then you give notification for appraisal. When the deal closes, they take all your money, but almost certainly they will give you back 80% of your proceeds because they don't want to pay interest on them while it goes through appraisal. So just for math's sake, just to make it easy, let's pretend it was a $25 deal and you got 80% back, so you got $20 back, and you have $5 sitting in a bank account somewhere for appraisal. That accrues interest. Appraisal takes a few years. And once it's determined what this was worth by the judge, which could be more or less than the amount they paid for it, the lawyer takes his fee, which is like 20%, and you get the rest. Why is EDR so interesting from an appraisal perspective? So the way appraisal works is it's the value of the company on the day it closes, not the value of the company on the day it was signed. And because TKO is such a huge part of EDR, the judge can and will just use either the closing price of TKO that day, or maybe even a premium to it if you want to give a change of control premium. But even if you just use the closing price and the price is 118, it values the remaining EDR at something like 4 or 5 times EBITDA. And people believe that the remaining EDR is worth 10 to 12 times EBITDA, maybe even more. The difference between those two numbers gets you to like mid-high 30s, maybe even into the 40s versus 27.50. So you put up $5 and you get back 15 or 20 a few years from now with a very, very low risk of capital impairment. But it gets better. You also get to participate in the typical post-close fiduciary lawsuit that I've been talking about for months, similar to what DVMT was and Boardwalk Partners and Dole Foods back in the day. I believe after the filing just came out that post-close lawsuit is going to be worth billions of dollars. There's no majority of minority vote. They negotiated this in a matter of 5 days or 3 days, the entire deal. They got strong-armed by Ari, telling the special committee that the Silver Lake can't go above 27.50. Silver Lake said they won't sell to anybody else. All of these things are illegal in Delaware. Okay? There's case law that says if you do these things, you're going to get sued and you're going to lose a lot of money. So you get both of those things. So what's going to happen with EDR between now and close? It's my belief that you're going to see massive buying in EDR in the next 4 to 6 weeks. And it's going to trade well above the closing price of 27. It's actually 27.68 right now because you get 18 cents of dividends between now and the close. And the only way to participate in appraisal is buying it no matter what the price is at. If the price is 28, 28.50, and you think you're going to get 40 out of this, of course you're going to do that. Plus, you get the post-deal close lawsuit, which could be worth anywhere between 50 cents and $3, if not more. So I really like EDR here. I haven't decided if I'm going to appraise or not. I'm leaning towards appraising through this lawyer because it's too sexy. Someone asked when it's going to close. It's going to close towards the very end of this year or the first quarter of next year. There's no deal risk. They've already signed their vote. There's no antitrust risk, and the only terms left are some foreign approvals. But Silver Lake already owned and controlled this company, and then also there's some sports gambling approvals they need. But if they don't get those approvals by the end of the first quarter of next year, they still have to close. They have to close even without the approvals. So keep an eye on it. You'll see what happens to it over the next 4 to 6 weeks as funds position for appraisals. What's next? AMPY. Obviously a great quarter. The beta well works spectacularly. I don't know whether they're going to sell the barrel asset. I hope they do. But the real value creation is these beta wells. If the next 2 test wells do as well as the well it just did today, the stock can easily go into the teens over the course of the next 12 months. That's how valuable beta is. So very happy with the way that's played out. AQN reports tomorrow, and I'm expecting news on the renewable sale tomorrow. It's supposed to happen mid-year. We're now past mid-year. I'm very hopeful they'll announce it tomorrow. Once that happens, and then of course that's the close, I think AQN has a very good chance of re-rating back into the 8s. Plus you'll get the dividend for the next 6 months, 9 months. So I made AQN very big. It's also a defensive name because it's a utility, and I'm into it. What do I think of AMPY management? They have been far from the A team over the last few years, to put it mildly. I've been very disappointed with the way that they've run the company and the people they put on the board. But in this situation, we're all pretty aligned with them now. And as long as the beta wells play out, I don't expect any kind of theft or poor capital mismanagement that's going to destroy the value here. Let's see what they do with the barrel assets and if they don't sell them, because they kind of are hedging themselves today about that. I'd be very interested to see what happens there. For AMPY, I own a ton of common, and I own 750, 1250 call spreads for 26 and for 25. It's a lot of call spreads for 25. I've short some puts in 25 to offset the theta for the call spreads. But I mean, for the most part, it's just all common. If Vegas happens, we got to invite that conference call operator. That's hilarious. Yes. Oh, and Vegas is happening if TH gets sold for any price above 1080. And I don't believe in superstition, though we've never had a Vegas trip in all the years I've talked about Vegas happening, because whatever I say, it'll happen if the thing never happens. So I'm hoping to prove superstition wrong here. It's very hard for me to see how Target Hospitality is not sold. We're aligned here across the board. We have a willing seller who owns 65%, but also someone who needs to do something. They have to get rid of this position, either taking it private and putting it in a new fund, then flipping it to a private equity firm in a few years, or selling it to a strategic at some point. They know what they're doing. They're very, very sharp. The glass is gigantic, actually, Eric. You know what they say about a man with a gigantic glass? He's got a gigantic smoothie in it. What else? What else do I want to talk to you guys about? On Nordstrom, JWN, I'm just waiting. Waiting. I obviously did not like the way the market was going the last 2 weeks. Not a great environment to take out a retailer, but the stock trades great, and I'm cautiously optimistic we will get a Nordstrom deal in the next month or two, if not sooner. I'm just waiting. I own a new position that I've already lost money on pretty rapidly, which is GTLB. GTLB. And the story here is that there was an article, Gitlab. There was an article in July that said that they are running a process and that there were several or more than one strategic interest, and they named Datadog as one of the strategic interests. Datadog went down a lot on that article. And a week ago, the chief revenue officer left for another job at Amazon. And that is when I bought it, after the stock went from 50 to 44 on the chief revenue officer leaving. To me, that didn't seem like a sign that the deal was dead. It might take up to a year for it to close if they do a deal. And he could have got paid tens of millions of dollars to join Amazon to forfeit his stock at Gitlab. He was only at Gitlab for 1 year. He did have $20 million in stock, though. Market hated it. They reiterated guidance when he left. And I went back and looked from a year earlier when the last chief revenue officer left. And they did the exact same thing. They reiterated guidance. And then when they put up the numbers a month later, they blew out the guidance. So I was worried that maybe they weren't going to blow out guidance if they just reiterated it. But that's just what the company policy is to do, I guess, is not raise it or put out preliminary numbers when your chief revenue officer leaves. Because they have to be. It's an expensive company. Today, the stock is down because Datadog reported, and I don't even have to look at the conference call because I'm sure they were asked about it, and they must have said, no, we're not buying Gitlab. I think it's an opportunity because they were never going to be the ones that buy this. It would be Amazon or Google, and both of them obviously have major antitrust risk with buying it. So the market is very skeptical that they're going to get this done. Google owns like 10% of the company, has 20% of the vote already. Also, if Google was going to buy it, it probably would have been done in a more secret way. Though the last two deals that Google was close to buying both leaked, and they both got killed before they were finished. JFrog's quarterly also do some cold water and software dev tools. Oh, interesting. Maybe it's down because of that. I'm pretty sure Datadog must have said something, though. But I didn't know that. So I put on a position there. I'm just gambling. The CEO has cancer and had it for 2 years, and it recently came back, and he controls the company. And I don't think it's a question of whether they would sell. It's just a question of whether Amazon or Google want to take the antitrust risk to purchase them. And I thought it was worth a risk. So it wasn't a big position before today. Today, it's now a big position. I probably won't own it for very long. But it is what it is. Bridge Bio has been trading like crap. Everybody's nervous about the ALNY data at the end of the month. I've already talked about this ad nauseum. It's my second biggest position. It's huge. That and Target. All right. Any other questions? Cool. Peace. Hopefully next time I'm on here, we'll have some great news on either Target or on one of these names. Take care, everybody. Have a nice weekend.